Our next story comes from Zimbabwe. They've introduced a new currency and abolished the old one. The new currency is called ZiG, or Zimbabwe Gold.
Zimbabwe, which must hold the record for hyperinflations, announced the other day the launch of a new currency, fixed to gold. Deep skepticism is warranted that the government has the discipline to make such an arrangement work.
It may seem surprising, but there is a growing shift towards reestablishing a gold standard. Despite being widely criticized by economists and financial experts, the U.S. successfully used this system for 180 years until the early 20th century. Contrary to popular misconceptions, the system was quite effective. It prevented inflation when the dollar was linked to gold and supported the longest period of economic growth in U.S. history. Since the dollar was detached from gold, average growth rates have declined by about a third. Today, median household incomes could be significantly higher, potentially by $40,000, had the historic growth patterns persisted. Despite prevailing disdain for the gold standard, unfolding events often bring once unthinkable ideas into serious consideration, eventually becoming a reality. Evidence of this shift can be seen as central banks, including those of China, India, Russia, and Poland, have been purchasing gold at record rates.
Now, recently, a lot of the central banks in the world have been buying gold. In fact, they've been buying more gold now in the last 12 months than probably any time since the early 70s. Why are central banks buying so much gold, and particularly the Russians?
This trend is not just an anomaly, but part of a broader reevaluation of the dollar's dominance in the global economy. As nations accumulate gold, it reflects a strategic move to hedge against potential currency instability and economic uncertainty. The growing apprehension about the dollar's future is driven by the U.S.'s ongoing economic challenges and fiscal policies, which many perceive as unsustainable in the long run. The resurgence in gold buying by central banks suggests a cautious approach towards maintaining financial stability in their respective countries. This shift could potentially lay the groundwork for a more significant reconsideration of gold as a central component of international monetary systems. As these trends continue, the debate around the gold standard might gain new momentum, challenging the current financial paradigms and possibly leading to a transformative shift in how global economies operate. Despite the historical skepticism and the complexities involved, the increasing interest in gold underscores a deepening concern over the existing monetary frameworks and points towards a future where gold could once again play a critical role in global finance. Another indicator is the rise of cryptocurrencies, which initially emerged as a high-tech plea for an alternative due to the growing unreliability of government-issued fiat currencies. The issue with most cryptocurrencies, particularly Bitcoin, is their failure to maintain a stable value, which is crucial for conducting commercial transactions, especially in long-term contracts. While there are a few cryptocurrencies linked to gold, they have yet to gain sufficient credibility or develop the mechanisms for widespread use. However, as government monetary policies continue to falter, this is likely to change. The rampant creation of debt, both public and private, will inevitably lead to a crisis that cannot be ignored. Currently, the world's total debt stands at an astonishing $300 trillion, 3 times the global GDP. Additionally, the BRICS nations, originally Brazil, Russia, India, China, and South Africa, and potentially expanding to include others like oil giant Saudi Arabia, are slowly starting to make significant moves in monetary policy. For example, India recently began experimenting with gold-based government bonds. Monetary expert Nathan Lewis, who co-authored the book Inflation, What It Is, Why It's Bad, and How to Fix It, noted that such a bond, if it had been available since 1971 and offered a 4% return, would have outperformed all global stock and bond markets. Zimbabwe, notorious for its hyperinflation, also recently announced the introduction of a new currency pegged to gold. While deep skepticism remains about the government's discipline to sustain this, it marks a significant shift in monetary strategies. These developments reflect a broader questioning of traditional fiat currencies and a tentative move toward alternatives that might offer more stability and trustworthiness. As nations increasingly grapple with high levels of debt and economic instability, the appeal of gold-backed financial instruments and other stable value assets becomes more pronounced. The interest in such alternatives is not just theoretical. It signals a practical shift in how countries are preparing for potential financial turbulence. As these alternative monetary systems gain traction, they could herald a significant transformation in global financial systems. The introduction of gold-backed currencies and bonds by countries like India and even Zimbabwe points to a growing recognition that stability in currency value is critical for economic confidence and long-term investment planning. This shift towards assets backed by tangible commodities like gold could be seen as a protective measure against the volatility inherent in unbacked fiat currencies. Now, if you like this video, check out this next video right here.